Hey everyone, and thanks for jumping back into the macroverse. Today, we're going to talk about the most recent CPI report. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. I know you might often see sort of the headline numbers come out, but I do want to at least break things down by category. Look at the numbers, look at the momentum to see if there is any, in what direction, and we'll just take it from there. So first, we'd like to start off with headline CPI. Now, headline CPI, as you can see, late last year, started really to move down considerably, right? Really starting in June, but then it leveled off a little bit until September, and then it really started to drop quite a lot. But we said back then that it will likely be a stochastic process, right? We should not expect it to go down in a linear fashion, right? It's a stochastic process. And we also know that getting that last 1 to 2% is going to be, a more difficult task, and that is showing that is the case right now. I mean, CPI, headline CPI, found a local bottom back in June at 3.09%, and then it's moved all the way back up to approximately 3.71%. So headline CPI this month actually came in at around 3.7%. Now, if you look at more digits, you can see that it actually came in at 3.69%, which was slightly lower than where it was back in August at 3.71%, but it's gone around to 3.7, so it's more or less the same. But again, the point is to say it is relatively sticky at this point because the Fed has really been unable to accomplish their objective at this point, or at least so far, of getting back down to that 2% goal. And we know one of their mandates is, of course, price stability, the other one being maximum employment. So then the issue here is, well, what will it ultimately take to get inflation down to 2%? Well, one of the things that could help get inflation down to 2% would be something like lower asset prices, right? And we've seen a lot of asset prices go down. Even the stock market has had a sizable correction in August and September, and we talked about that correction. And now that it has transpired, those sorts of corrections can have impacts on inflation. If people feel like they don't have as much money, they're going to be less likely to spend that money, and therefore demand might go slightly down. Therefore, prices aren't going to go up as quickly. So there is an argument here to be said that corrections by the S&P 500 can also lead to disinflation. That doesn't mean that it's going to become deflation, but it can lead to disinflation. And the other thing that can lead to lower inflation would be, of course, a recession, right? A recession where the unemployment rate is going up, and people are worried about making sure that they can pay their bills for until they can find another job, and then that can lead to sort of inflation going down. One of the things you'll note is that in all these historical periods of high inflation, a recession was eventually induced. Eventually, right? Now, that doesn't mean that it has to occur, but it is still a scenario that I think is worthwhile to consider, right? Normally, when you get inverted yield curves, when you get inflation pretty high, a recession can be a byproduct of the Federal Reserve's response to bring inflation back down, right? The higher for longer, right? Higher interest rates, trying to stay at those interest rates for longer periods of time than maybe people are really wanting them to do so. And so because of that, that can all, of course, lead to the disinflationary process. So lower asset prices, recessions, oftentimes they go hand in hand, but you can have lower asset prices without recessions, as 2022 showed us. And we also saw asset prices go down in December of 2018. We saw them go down in late 2015, early 2016. You don't always have a recession just because asset prices go down. 1987 wasn't a recession, and the S&P had a considerable drop. So when you look at this, we can see the disinflationary process started back in June of 2022, and while it was going down essentially monotonically for a while, that process has become a bit stickier, and you can see that inflation hasn't really moved down in any considerable way since the summer of 2023, right? Just a few months ago. But again, it has moved up slightly. Now, if you were to look at a monthly change of this, what you'll see, and we'll just sort of zoom into this local area here, is that the monthly change was 0.207% back in July, then 0.408% back in August. Then this last month, it's actually down. So hopefully, we are going to continue to see the disinflationary process take shape, right? That is what we would hopefully see. I think we'd all prefer to get back to a long period of economic expansion. But it's really hard to do that as long as you have a Fed just sort of constantly talking about higher for longer and whatnot. So I think at this point, what we should watch is does the disinflationary process continue, and can they get us back down to 2%? Now, if they induce a recession, so be it, right? There are a lot of indicators that suggest that could happen, but that would just lead to opportunities. So I don't really think it should be something that is feared. What I also like to do is break down the CPI report by category. Okay, so if you were to look at inflation year over year percent per category, this is what you get. And I'd like to zoom in sort of the recent trends and highlight each individual one, right? So this is headline inflation, right? It was moving down pretty steadily for a while, and then it started to go back up recently. These last 2 months were more or less the same, and hopefully it's going to curve back over and continue to go down. But some of the categories have moved in a favorable direction to the downside, while others have moved back up. So food and beverages continues to go down. You can see that the contribution or the inflation of food and beverages in it back in August was 4.22%. This most recent report has it at 3.73%, which is the lowest it's been, really since, August of 2021. So, more than 2 years ago is how long ago it was where the food and beverages inflation was this low. That doesn't, and again, a common question I see is, well, prices of food has gone up, right? So how is all this stuff true? A lot of people, I think, misinterpret what these charts are saying. Disinflation, the disinflationary process, does not imply that prices are going down, right? All it implies is that they're not going up as quickly as before. If it goes up 10%, price is still going up. If it goes up 4%, the price of it is still going up. It's just not going up as quickly. For you to see prices drop, you would have to see this go below zero, okay? And that is not something that often happens. You can see that for food and beverages, on this chart, we've seen it happen twice before. It happened in 2016, and it also happened in 2009. Okay, 2016, we had a recession scare. We didn't actually get one, but we came, somewhat close to one. And of course, this was coming out of the financial crisis way back over here in 2009. So it is possible to see deflation. It's just not a very common thing to see, right? You can see on this chart going all the way back to, the 1960s, we've only seen food and beverages category go down, inflation, or go into a deflationary process. That's only occurred these 2 times. Okay, so it doesn't mean that it can't happen again. It's just that when it goes down, it doesn't mean that prices are going down as long as the number is still above zero. So if it goes below zero, that would then mean it's in a deflationary process, meaning prices are actually going down. As long as it's above zero, prices are going up. They might just not be going up as quickly as they used to. Okay, so, and if you want to look at, like, say, a monthly change of this, the monthly change has become a little, it has become a little bit less desirable. I mean, like, the monthly change back in March and May and April, in June, was almost negative 1% month over month, right? Now it's down to negative 0.5%. Okay, so the issue is that it is coming down, right? It is coming down, but it's probably not coming down as quickly as the Fed would like. Okay, now up until this point, again, the Fed has 2 mandates: price stability, maximum employment. As long as the labor market is strong, then the Fed is free to continue to combat inflation. The problem becomes what happens if the unemployment rate starts to go up and inflation is still not back at their 2% goal. What will they do? They've talked a big talk. Will they walk a big walk? And I don't know the answer to that question. A long time ago, I said I think the Fed funds rate will go to 5.5%. It has. From this level, I think they could hold it here for maybe hopefully as long as possible, because they risk, if they pivot too soon, they risk just an inflationary, sort of another round of inflation for the next couple of years. So hopefully they don't pivot too soon. Hopefully they do what they need to do to really get them, get inflation back to their goals. If we continue this, we can look at housing inflation. Housing inflation is probably the one that lags the most. You can see that it didn't even top out until, January at around 8.25%, January 2023. Remember, food and beverage inflation topped out in August of 2022. So housing inflation has had a lot more of a lag. It has been moving down in 2023. If you look at a monthly change, it's kind of been all over the place. This most recent month, it only we only saw inflation, or sorry, we only saw headline inflation drop by about negative 0.142%. Prices are still going up, right? They're just not going up as much as they were. So, but at least it's moving in the right direction, right? At least it's moving in the right direction. We'd like to see this continue to move down. If we look at for apparel, actually a pretty big drop down. So that is a welcome sight. You can see that last month it was at 3.09%. The month before that, 3.17. The month before that, 3.08. Right? It's been around around 3% for a while, and we haven't really seen a considerable change there. And I believe in prior videos we sort of talked about the apparel category and how it hasn't really made any progress in a long time. Now it's actually made some progress. It's dropped all the way down to 2.26%, right? After being at around 3% for more than half a year, or around that level, now it's dropped down to almost 2%. Look at the monthly change on this, right? This is a pretty big drop to go down almost a full percent on a month-over-month basis. The last time that happened, was more about a year ago, almost a year ago. So that is a welcome sight to see, to at least see that some of these categories are going down more so than maybe some of the other categories are. So that's a good sight, a good thing. If we look at transportation, that one actually has been going up recently. But the thing to note about transportation is that it's one of the few categories that actually became deflationary back in the summer, right? If you look in the summer, transportation inflation was actually at negative 4.6%, meaning it was deflationary, meaning prices were actually going down. Okay, so this is a category where prices were actually going down. It started to go back up recently, but I don't really think it's that concerning. You can see that the transportation sector can experience deflation a lot more often than the other categories that we're looking at. In fact, it's not even that uncommon to see it. It's happened many times throughout history, and many times it did not even occur. It did not even coincide with a recession. So this one isn't as big of a deal, considering even though it's positive, it's still only at around 2%. So 2%, if it can stay at that level, would be, I think, just fine as far as the Federal Reserve is concerned. But I think the bigger thing is what will this do in the coming months? And at least this most recent move by this category, while it did go up, it didn't go up as much as it did the previous month. It went up about 4%. So hopefully it's going to stabilize, around that 2% level rather than go up too much and make the Fed's job even harder. Medical care is one that has actually become deflationary recently, right? And if you look back throughout all of history here, we haven't really seen a period where it's been deflationary. But medical care for the last 3 months has actually been deflationary. And if we go to a month-over-month change, you can see that, right, it's been dropping pretty consistently for a long time, right, about 0.5% a month. The issue, of course, it's not really that big of an issue, but if you're dropping 0.5% per month for a long time, eventually you see it go deflationary. And I don't think anyone here is going to be complaining about medical costs going down, right? I think that's actually a very welcome sight. So hopefully medical care category can actually stay deflationary for a while. I think everyone will be happy about that. If we look at recreation, that is the category that I was looking at earlier that actually went up recently. And this is one that is still at relatively high levels. I mean, as recently as July, it was at 4% year over year. Now in August, we saw it drop down to 3.5%. Now it's back up to 3.88%. If you look at a monthly change, right, this is up 0.32% over the last month. So that is not a welcome sight, right? It's not a welcome sight. I suspect that it will likely continue to go down as the months drag on, but in the short term, obviously this is not what we want to see. We can go look at education and communication. This is sort of what the chart looks like going all the way back that we have data for on here. And it also went up last month. It went from 1.04% up to about 1.07%. So a pretty small move to the upside, but it's still in that range where it's not really that big of a deal. I mean, it's still only about 1%. Okay, so other goods and services also went up. It's back up to 6% year over year. Now, this one topped out back in November of 2022, but it also came pretty close to that level again back in May of 2023. It was in a disinflationary trend here, but this recent month, it's actually gone back up by about 0.256%. So that's not really a welcome sight. So I think the issue when you look at all this stuff is that there are categories that we're seeing a disinflationary process. There's one or two categories here and there that are actually in a deflationary process where prices are actually going down, but there's still several that actually in this recent report we saw them go up. So the Fed's job is clearly not over with. I still don't think they need to raise again. I'm not saying that they won't. I don't think they need to. I think that the more important thing at this point is not continuing to raise rates beyond the current levels. The more important thing is just holding them at these levels, right? And not caving if the markets show weakness, right? I mean, if the S&P drops to 4,000, hopefully the Fed continues to stick to their mandate and not just cut rates because they want to come to the rescue. Hopefully they can do what they need to do to get inflation back down to where it needs to be. So that's breaking it down by category. And again, just sort of looking at it, headline inflation, that's what it looks like. So what we would like to avoid is see these inflationary waves, right? We'd like to avoid a period like the 1970s, which is what Powell has talked about many, many times, where we basically just kept flipping from lower rates to higher rates, QE, trying to stimulate the economy versus trying to bring inflation back down, and they couldn't get it right. And it took the better part of a decade to figure it out, and then Volcker came in and essentially induced 2 recessions back to back, and that actually squashed inflation. And then after that, we enjoyed a long period of relatively low inflation. So the Federal Reserve and Powell, of course, today want to avoid repeating the mistakes of the 1970s, and of course would prefer to just see inflation come back down to 2%. And I think they will. I mean, at this point, I still feel convinced that they will continue on until the job is done, exactly how they've said many, many times. We'll also take a moment to look at core inflation. Core inflation has been a little bit more optimistic in its recent trends because while headline inflation has sort of stalled out here at that 3 to 4% level, core inflation is still trending down. Now, the counterpoint, of course, is that headline inflation already went down to 3%. Core inflation, while it has been going down, it's still over 4%, right? It's at 4.13%, which is still well above the Fed's mandate. You can see that core inflation actually topped out at 6.64% back in September of 2022. So it's a welcome sight to see that one continue to move down. But if headline inflation is any sort of predictor as to what might happen with core, then it could be a sticky process to actually get it all the way down to that 2% target. For now, it seems like it's had pretty good momentum. If you look at monthly changes of this, you'll see that it's been negative off and on for a while, but mostly negative. There's been occasional moves back up to the upside, but a lot of disinflationary, the disinflationary process has continued. It hasn't gone down monotonically, as you can see, but for the most part, the core CPI has continued to drop, and hopefully we'll continue to see that as the months go on and see this go back down to the target of approximately 2%. If you guys like this content, make sure you subscribe to the channel, give the video a thumbs up. We do have Into the Cryptoverse Premium at Into the Cryptoverse at intothecryptoverse.com. We'll wrap it up there. I'll see you guys next time. Bye.